However, demand for lithium is growing very healthy, double-digit numbers every year. I don't think there's another mineral that compares in terms of the growth of demand. One of the things that always very impressed me about the Awoya project is it's a pretty low-risk operation. You've got all the right characteristics for it. Where the mineralization in the ground, the nature of the mineralization, the ability to process, extract, and indeed create infrastructure, and very near to that great infrastructure in a very good jurisdiction such as Ghana, which has a long mining history. So we have a very experienced mining team, and the great thing about Ghana is that it has something like 14 operating mines in different minerals. Obviously not in lithium, we'll be the first lithium mine, but we're able to draw upon that experience, and so we have a highly experienced team there in mining.
If you're a contrarian investor, you're always looking for something which is not in the hype as you like. Mining is a good place to be at the moment, but the lithium sector in particular could be even a better place. There could be great opportunities for the upcoming years as the e-vehicles will probably come back and they need tons and tons of lithium. So it's a great place to be. And today with me to talk about that is Niall Herbert. He is Executive Chairman of Atlantic Lithium. Niall, first of all, it's good to have you.
Good to be here.
Great. So let's start a little bit on the macro side, if you like, before we dive into your project and the economics. I mean, the lithium prices, they corrected quite sharply, right? They are kind of down like 80% from the last height. All the large stocks and producers, they also corrected quite sharply. So tell us a little bit more about the lithium industry. I mean, we have had ups and downs before. Are we now at the end of the downtrend? And are you expecting another lithium hype or boom pretty soon to really surge the demand here?
It's a good question. It's a good thing to talk about. So in terms of where the market is for lithium, if you look over the last decade, I think you'll find in 3 years it was the best performing mineral in 3 years, and in 3 years the worst performing mineral. And the reason for that is that lithium, in terms of an interest in the product from the demand side, was very small if you go back a decade ago. And obviously with the switch to battery technologies, and particularly in electric vehicles, but also now in battery storage, which is growing to 300% a year, you're seeing a very sharp increase in demand. And for all of those who know mining, you'll appreciate bringing on new mines is a relatively lengthy process. So there are a number of projects that have been out there that have been managed to be brought to production. But during that period, certainly the last few years, you've seen these huge spikes in prices and then them falling back as new mines come on stream. However, demand for lithium is growing very healthy, double-digit numbers every year. I don't think there's another mineral that compares in terms of the growth of demand. A number of projects have been brought forward. This year, we are seeing new production from several projects. So we see that come out this year, and so prices have stabilized. Is it a bad price today? The prices have been around $1,100-$1,200 per ton. If you look at a project that we have, for example, which is Awoya, where the costs are under $700 a ton, actually, this is a pretty healthy price already. My expectation in terms of pricing is I don't expect the price to change very much this year. But if you go into 2025 and 2026, when we come to production, there is very little new production that is forecast. And with this double-digit growth in demand every year for lithium, you will expect to see a tightening of the market and rising prices. I was in China recently, and it was a very interesting trip for me talking to the Chinese, who are the chemical converters, the people who actually make the battery chemicals from our lithium. And what they're looking to do is to try and have a more stable market. So not to have these dramatic jumps up in prices, because actually it interferes with the industry and also feeds through into higher costs for EVs. So we're looking for more stability in the price. I would imagine that the price will firm through 2025 and certainly in 2026, where you see very little new supply forecast. So I think the outlook is very bright for lithium. But if you were to ask me the price of lithium today, actually for a project that we have, such as Awoya in Ghana, this is a perfectly good price.
Yeah, I mean, you can still earn money with your Awoya project, and even if the prices go higher, right, that's quite of a bonus for you in the economics. But right now you can earn money, which is the most important thing in my opinion. And to be honest, let's face it, the lithium industry wasn't as big as it is today, like 20 years ago. Nobody wanted to have lithium. Geologists were like, oh, there's lithium in the ground. We don't need it, because there was no demand, and times changed, and we are just at the beginning of the lithium industry to really come to life, I think. So now, thank you for your insights on the industry, but let's talk about the management team, because we always tell investors it's good to have a great project, it's good to be in a good jurisdiction, but in the end, most of the things are really come down to the CEO, to the management team. And how are you guys positioned? Because you are doing the deals, for example, with partners and with the project side and all this kind of stuff. You're responsible for my money. So tell us more about the experience of the team. And do you guys have skin in the game? Meaning, are you invested yourself in the company?
Yes. So in terms of skin in the game, myself, the finance director and the CEO have all been buying shares over the last year and a half. I think I'm right in saying I spent well over $1 million Australian buying shares in the last year and a half. And I regularly buy shares when I can, which isn't often because you obviously have restrictions on when you can buy shares as a director. But I think the finance director as well has spent well over $1 million Australian buying shares in the last year. So we're big enthusiasts for the project. And the reason for that is very simple. And I've always said this is a very straightforward project. I've worked in mining for 25 years. And my speciality is the late exploration through to development stage of projects. I started building copper mines in the late 90s. So this is an area I'm very familiar with, and one of the things that always very impressed me about the Awoya project is it's a pretty low risk operation. You've got all the right characteristics for it. Where the mineralization ground, the nature of the mineralization, the ability to process, extract, and indeed grade infrastructure, and very near to that grade infrastructure in a very good jurisdiction such as Ghana, which has a long mining history. So from my side, very happy to put my money into my project, as it were. So I basically reprocess just about everything I earn into buying shares in the company. In terms of the management team, one of the very important things we did 2 years ago when we decided that we were going to take the project to production was to bring in an experienced lithium mining team. All the experience in the world in terms of spodumene mining is in Western Australia. So we identified an experienced lithium mine manager, which is Keith Muller. And so Keith actually has been running lithium mines for some years now. So one of the few people who has that depth of experience. And we have set up, if you like, a center of excellence in Perth, in the center of the lithium industry, to bring in all the people who have that experience. So in terms of actually lithium spodumene experience, we probably have the best team in terms of development that there is in Africa today. But also within Ghana, we have a very experienced mining team. And the great thing about Ghana is that it has something like 14 operating mines in different minerals. Obviously not in lithium, we'll be the first lithium mine, but we're able to draw upon that experience. And so we have a highly experienced team there in mining. So it's a very good combination. We bring in the foreign expertise in the extraction and processing of lithium, one side from Australia, and the other one we draw on the local knowledge of developing the mining country. So a very good team. The team has been growing very quickly in the last 2 years and bringing in all the individual specialities so that we could take the project forward. So feeling very, very robust about our ability to deliver this mine on time, on budget. And it's a very good mine in itself, low cost, it's low OPEX, but it's also low capex. So a relatively straightforward construction project, nothing too challenging.
This sounds really, really good. Thank you very much for your insights and being so open with us about your share purchases. You talked about Ghana as your restriction, and I think that's always good to really point out, right? I mean, Africa, for a lot of investors, is a bit, there's a question mark, right? Because a lot of African countries are not that stable, and a lot of mines had to be shut down in Africa because of the restriction. But you're located in Ghana, and it's really important to point out that Ghana is different. Ghana is special. There is a large mining history. You are good connected with the government, and I think that's really a plus point and an upside potential. Also, if we talk about the infrastructure, right? I mean, you're close to Europe, if you like. You're close to Asia somehow. So you're in the middle of all the battery hubs, if you like, which is really a plus point as well. You talked about you and the management team being engaged in the company. Who else is engaged in the company? Let's talk about the share register. Do you have other big names in the registry?
Yes. So our biggest shareholder has actually been with us from the very start of the company. We listed 9 years ago, and we're very lucky to have them on board. It is an African mining group based from South Africa with a very long pedigree. They run a number of mines in manganese, chrome, and iron ore. a great deal of expertise that we've been able to draw upon over our last 9 years as we've taken projects forward and our analysis of projects to take forward. They are hugely enthusiastic about the Awoya project. They increased their stake, I think, from 24 to 27% earlier this year. There were certain limitations. They can't buy more than 3% every 6 months after the Australian exchange rules. They actually did make 2 offers for the company at the end of last year, which we didn't feel were full value for other shareholders at that point in time. But it shows how committed they are to the project and how much they value the project. They see a lot of synergy in terms of the way they run their operations is the way that we're running Awoya. And as I said earlier, all-in sustaining costs are under $700, and I think we're looking around $300 for our C1 cash costs. So these are very low numbers against current lithium prices, $1,100, $1,200, and the expectation actually that lithium prices will rise over the next 2 years. So a very strong partner for us. We also have Piedmont Lithium, also a shareholder in the top company, but also a partner in the project, and they provide most of the funding for the project. So their commitment is the first 70 million of capex and half of all remaining capex. So that's a substantial commitment in itself. We also have the Sovereign Wealth Fund of Ghana, joined us as an investor earlier this year in Atlantic Lithium, and we will be completing shortly an investment into the local entity as well. So they're looking at another bigger investment, and they'll be a partner at the local level, investing 28 million initially, and then an ongoing share of the costs of the build. So again, a very important partner for us. So 3 very good partners represented in our shareholder base already, and providing a significant part of the funding towards the project through those partners. And on top of that, we're also looking to complete an offtake deal with an offtaker, which will provide us with a large amount of funding through prepayment for product very shortly. So I was in China recently on those meetings, very impressed with the people that we've been working with, and look forward to concluding that agreement shortly. I'm very pleased how that's gone.
Right, so you already had 2 offtakes offers, if you like. I mean, that's really showing how companies and how investors in the world are still really looking for lithium. I mean, nobody would give you an offtake offer if they are not convinced that you are a great company and obviously you have a great project there, and if they weren't convinced about another lithium boom, if you like. So that's really good to know from the investor point of view. We also started to talk about the funding. Maybe we can just finish it before we go deeper into the economics of the project. I mean, you want to build a mine, you want to be in production by 2026. So building a mine costs a lot of money, right? So maybe we can just really sum up the points. How can you get to your, how much is the capex, and how do you build the mine? Where's responsible for the money? Where does the money come from?
Good question. So last year we put out a bankable feasibility study. The capex of the project is 185 million. Actually, for those of you who invest in mining, you'll appreciate actually 185 million to build a mine. And particularly a mine of these characteristics is not a lot of money, and the payback on it is very quick indeed. So it is a very good project to be involved in. So as I highlighted there are 3 major partners, 2 of which are already in the public domain. The first, obviously, is Piedmont Lithium, who want to build a chemical conversion plant in Tennessee. And so therefore, to secure their offtake, they're making a substantial investment into the project. So as I say, the first 70 million of all capex and half of all remaining. So you're looking at 110, 120 million from them. We have funding coming from the Sovereign Wealth Fund, as I've said. So they're looking to put in 28 million coming up shortly. And on top of that, to absolutely make sure that we very robust financing, we look to secure our offtake agreement with a chemical converter. And so that chemical converter, we're looking for prepayment. Effectively, it's if you like, it's a soft loan arrangement for 75 to 100 million, which will provide us yet more financing, so that we'll be completely covered in any capex requirement upon us, and indeed any cash overruns. We'll make sure that we have additional cash there, so we're not going to be rushing back to investors at short notice. So it is a very robust project. You can see by the fact that we, as you pointed out, we have 2 off-takers very keen to take the product. It's in terms of the specification of the product, it's very popular among off-takers because it has very few impurities in it, which is important to them when it comes to processing. It's in a very good situation today that financing really is not an issue for this mine. It's pretty low risk in terms of taking it forward to production, and we have every expectation in 2 years from now that we'll actually be producing. We're looking to break ground on the project later this year. So we'll effectively start the construction process later this year. We're just working on final permitting steps at the moment, all of which has gone very well. And I really appreciate that all the support we've had from the Ghanaian government to get that done. And it's just a very exciting time for us at the moment.
Absolutely, and let's talk about the excitement of the project. I mean, you talked about 185 million capex compared to an NPV at 1.3 billion. There is a lot of money that you can earn. We are talking about low ASIC, as we already mentioned, right? You have ASICs around the $700 US dollar mark, if you like, and we have lithium prices well above $1,000 at a ton right now. You have an IRR of 94%. Tell us more about Evoya.
So, yeah, the thing about Evoya and having worked on projects for 25 years is that what's very impressive about it is it really is the simplest project I've ever been involved with. So the mineralization itself, the location of the project, it's actually on the coast in Ghana. It's the plant that we're planning to build will be 800 meters from the paved road. That paved road is 110 kilometers to a mineral processing port. So all the infrastructure is already there. We don't have to provide for that. We actually have, because of the straightforward nature of the project, we don't actually require a lot of power, but actually power lines run across the site and there's plentiful power supply locally, so we don't have that trouble. The Evoya Main, which is we have different deposits within the Evoya project, but Evoya Main, which is the biggest deposit, is effectively a hill. So effectively you're carving away the hill. And so it's pretty straightforward in terms of extracting the rock. And the processing options on it are very good. So it's a very large crystal size, which some of your listeners may be familiar with. Different projects have different crystal size, and obviously this is the ideal scenario. You have really big crystal sizes, you get a very nice product when you break it down. And because it has very few impurities, the nature of the combination, we only have to do a gravity circuit, which is a relatively straightforward processing stage, which will upgrade the product. It's done relatively quickly. So that again feeds into the lower capex again and the lower opex, because you're doing less processing simply because the nature of the mineral that you're taking out the ground is more amenable to be processed. There are less impurities, etc. So that's very convenient too. As I said earlier, you're working in Ghana. We don't have to bring people from far away to work in Ghana because it has a very well-established mining industry, well over 100 years. Lots of operating mines, lots of highly skilled and experienced people in country. We've also found that we're very popular, so we get the cream of the applicants, because most of the mining activity is in the north of Ghana, whereas most people prefer to be in the south, nearer the coast, nearer the capital, where they have families. So when we put out announcements for jobs, we find we get a very good response, and we've had some very good people join us. So that's been very good too. So. People sometimes ask me, what keeps you up at night? Well, not a lot on this project. Probably wondering what it is that I can't work out should keep me up at night. It keeps me up at night.
Yeah, I was about to say that all of this sounds really, really great. And if we have a look at Atlantic Lithium, really from an investor point of view, right? I mean, investors have opportunities out there to invest into companies with like 5-10 million market cap and a capex of $1 billion, which is hard to achieve, right? And in this case, we are really ticking a lot of boxes. We talked about funding. We talked about good infrastructure. You have team. You have a skin in the game as the management team. You have a great share registry. You have a low-cost project, and you're in a great jurisdiction. So now really tell us something about the upcoming milestones. What can investors who think this is a great story, and I'm looking at this today, what can they expect within the rest of 2024?
Well, we've actually got a lot coming up right now. So you go through long periods where there isn't much news flow to share, and then you have a sudden rush of news flow. So one of the things we're expecting to complete by the end of this quarter, which was the end of June, was to see the parliamentary ratification. So we already have the mining lease, but in Ghana, this needs to go to Parliament to be approved, which is a straightforward process in Ghana. I don't think that they've ever not approved a mining lease. However, unusually this year that there was Parliament was suspended for an extra month, so they're about a month behind in their schedule. So the parliamentary schedule runs to the 22nd of July. I have been talking to officials this week and fully expect the ratification to happen in the next few weeks. So anybody out who's listening there, you will see the parliamentary ratification and endorsement by the government coming through. At the same time, the EPA, which is an environmental permit, we finish next week our public consultation. That's all gone very well. So I expect to see the EPA come out relatively quickly as well on the licensing side. So again, probably next month, maybe August, the EPA with the ratification coming in next month, which is great. Obviously, as we've been talking, I've explained to where you are with the offtake process, and we have always said we'll conclude that mid-year. That's gone very well. I'm very pleased about where that's going, and I expect in the next few weeks to complete that process too. A very significant and powerful partner, and I think everybody will be happy with who we're working with. So that's very important too. We've got, we shall provide another update in the mineral resource. So we continually add to the mineral resource. We're not doing a great deal of exploration drilling because we've already got a very substantial resource for the mine. We want to spend our money, as it were, putting the project into production rather than resource drilling, but we continually upgrade that. So you'll see another incremental increase in that, and we should get that out again by the end of next month. I'm sure I'm missing something very important here. So ratification. Oh, yes. And of course, the completion of the second stage of the investment by the Sovereign Wealth Fund, which is dependent on getting the ratification of Parliament. So you should see ratification from Parliament, the second investment by the Sovereign Wealth Fund, which is obviously a substantial amount of money, a very major commitment in terms of financing from an off-taker. The remaining permitting steps come together such that we can look forward to breaking ground on the project later this year. So that's obviously coming up too. And there are some other lesser permitting matters that we need to work through. But again, we'll get those through so that we can complete that breaking of ground. And as I said before, one of the great things about working with Ghana is the government is very used to working through these processes to put mines into production, and they've been working hand in glove with us in terms of doing that. So they're totally committed to getting the project to production and indeed breaking ground later this year.
Neil, thank you very much. I think there is a lot of news flow ahead, a lot of things that investors can really look at, and all the informations will be also provided in German at our website, axinocapital.de/Atlantic, so you can read it in your native language. Also, you are dual listed here at the Frankfurt Stock Exchange, meaning people can buy it in the euro currency and through our trading hours, which is also convenient that you don't have to get up in the middle of the night, right? So Neil, thank you very much for giving us the insight on your exciting project. I'm really looking forward to talking to you again quite soon. Looking forward to see your news flow. Thanks for your time.
Thank you. Busy month next month.
Sounds good.